came forward with 50 basis points, which means, as Donald Trump perhaps rightly said, either we got a real problem going on in the economy that shows you how weak the economy is, or it's a political thing. Let's leave the politics aside for just a moment and think about where the economy is right now. Inflation has come down, but jobs being added, those are kind of lousy. I mean, really, really bad showing. They keep messing up the numbers. They keep missing the numbers. They thought they had a whole lot more than they had. And we saw that reflected in recent jobs reports that, they're just not adding what they need to add in order to keep pace and to have growth. Was 50 really necessary at this point? I guess we'll know in time, right?
Yeah, I guess the market was thinking, it could be 25 or 50, and the market really didn't know. They went with the larger cut, and it does raise questions. What exactly are they seeing? How healthy is this economy? We had those jobs revisions and the weak, disappointing numbers in recent weeks. Mm-hmm. It's interesting also just in the context of, back in July, this last Fed FOMC meeting was less than 2 months ago. Mm-hmm. So, back then they kept rates flat. They didn't signal anything. Mm-hmm. Things looked stable. And since then you had this really weak jobs data and the revisions. And I think other indications of softness in the economy. So it's a bit alarming. And I think a number of people are alarmed in that you've only seen 50 basis point rate cuts in the context of pretty severe.
I'm thinking about it, right? We're going back like some 16 years. You were dealing with the stress of '08, I think, or yep. Shortly thereafter, right? That was kind of the big problem at the time.
I think basically there were three phases in the last 25 years. So during COVID, they moved 50, mm-hmm. Clearly in response to a potential collapse in the economy. So that was in the 2020 timeframe. And then when the financial crisis set in back in the 08 timeframe, they moved 50, and then back after the .com burst, that was the prior.
So, in other words, there's not a ton of precedent for the 50, and yet they came forward with the 50 at a time when Kamala Harris says the economy's doing just great. That's a bunch of what, but. Look, we've seen the numbers. We look at the numbers. I would just say, I'm not so stressed out to the point where I'd be doing 50, but then again, I would never have been leaving rates probably as high as they did for as long as they did, or have been cutting them for as long as they did, coming out of COVID. So this is a case, again, of them sort of not really getting the timing quite right. But we'd rather, I guess, that they'd be more aggressive in this case, given that inflation is down around 2.9% at this moment. Maybe they have a little more wiggle room.
Yeah, and I guess they're always fighting the last war. So you think back, before in was it 2021, mm-hmm. we had CPI ended up 7% at year end, and rates were still zero. Yeah. Literally Fed funds was zero, right? And they didn't start hiking. They did a tepid 25 bips rate hike right. in March 22. Mm-hmm. And so they were very slow in getting in front of the inflation situation, and now that probably influenced them in terms of doing a bolder move here.